Yo, what it do, YouTube? It's your boy MB. Today is Saturday, the Sabbath day, March 23rd, 2024, and I'm ready to do the breakdown of the number one setup this week. So my goal for these videos is to show you the absolute best quality setup that is painfully obvious to see and that offers the best results. I like to show trades that I actually took during the week to avoid any type of hindsight being 2020 talk. But if I do happen to miss a setup, I'll still show you. That way we can know what to look for in the future so that we don't miss out. But to also show you that anyone can take these setups. To me, technical analysis is just being able to read the market's language. It shows you a setup and you have to take it. If it works, you're right. If it doesn't, you're wrong. But you just have to know where to get in if the market shows you a setup. So with all that being said, let me break down the best play of the week. So this was a trade that I took and it came bright and early on Tuesday morning. So before I show you the actual setup, let me break down the context behind this trade because you need to be able to formulate a thesis on why you're taking trades. Yes, you can take a setup because you see a pattern, but if you're taking a bullish setup in a bearish environment, or placing a trade right before a news event, you're just not giving yourself the optimal chance of succeeding. So the first thing I like to check for is to see what direction is the market going. So I've got a 4-hour chart here pulled up and you can clearly see that we're in an uptrend. So I have this trend line started from January 17th. Whenever we hit this low on February 21st, that's when I actually marked out the trend line. And then you can see over here last Friday, we actually bounced on it again. So this is my trend line. I just added this up here to emphasize, the channel that we're in. We're kind of in this range where whenever we get to the top of this channel, that's when we start to see some rejecting. But I didn't have this necessarily. I just wanted to show you as a point of emphasis. So now zooming into a 1-hour chart, diving deeper into a breakdown of the context behind this trade. You can see that once we kind of approached the top of this range, we started to see some type of sell-off. So on this Friday, March 8th, we hit an all-time high. And then from there, going on to the next week, on Thursday, we see we couldn't break an all-time high, and then we started to see a bit of a drop. And then on that following Friday, we continue to see the sell-off, but that's when we get the bounce at the bottom of this trend line. So here's Sunday's price action overnight. So from this Thursday and Friday, I have this downtrend. So this line here is our test, where if we break above that, this downtrend now becomes invalidated. So Sunday we had this push overnight, and then Monday we break the downtrend. So now the downtrend has one of two ways of becoming invalidated. The first way of it becoming invalidated is if we just keep going up forever and ever, and we just never come back to see this downtrend. Or the second way is if we do come back and we see a retest of the downtrend and then get a bounce. So we ended up getting the latter. So the first thing we have on Tuesday is the break and retest. So that's confluence number 1. So zooming in a little bit further for some more context, you can see Friday at 1 o'clock, we couldn't get a close above this area. And then same thing Sunday, we kind of just hovered around here for a few hours before finally breaking this area. So this was our previous resistance zone that we want to see acting as support the next time we approach this area. And so that leads us into confluence number 2, getting a bounce off of this new support level. So we got this bounce around 7 in the morning Central Time, which is still an hour and a half before the market opens. So I'm not saying take the long right here because I like to show you plays that happen during the session. So now let me finally break down for you the best play of the week. Alright, so now that we broke down the bigger time frames, this is a 5-minute chart. So you can see that overnight we had this downtrend. So now this line becomes our area of interest that we want to break above. We get the bounce off of that crucial support zone, and then this candle here engulfs these last two 5-minute candles, and then we also get a close above the 9 moving average. So this was our first indication that maybe this trend might be breaking. So I woke up at 7:30 and I saw this move, and as soon as I saw that we consolidated sideways and bounced off of this 9, I was like, man, I really want to take this long, but I had just been looking at my charts for 10 minutes. So I was like, you know what? No, I'm just going to wait a little bit longer. And so then once we started approaching this downtrend right here, this is actually where I took my long. I took it at 96. So I was anticipating a break out of this downtrend. But again, this was all still pre-market, so I still wouldn't consider this the best play of the week. So now let me just show you the optimal entry, because even here, I feel like we could have broken out and then retested this downtrend. So this actually became our 4th confluence and once we broke out of this downtrend intraday. So first we had the giant uptrend, that's confluence number 1. We had the breakout of this downtrend, that was confluence number 2. We had the bounce off of the support level, that's confluence number 3. And then 4, we had the breakout of this pre-market downtrend. So 5 minutes before market open, you can see that we get this close above VWAP, but then at market open, we get a bit of a pullback. And this leads us right into our entry. So I have a Fibonacci tool starting from where we bounced at the bottom to the top of this move where we got a rejection. And if I move it over, we have a 50% pullback. And there's a couple different things that I like about it. The first thing I like is 1, it's a 50% pullback. So that's really confluence number 5. 2 was right in this area of congestion where we have our initial breakout. We had this red candle where we found some buyers to continue to the upside. So I want to see if buyers are still in this area. So this is our entry. Now watching this in real time, I was actually anticipating some type of retest. So whenever we started going up, I was like, you know what? I'm not going to take this long because I feel like we're going to come back and retest this area. So I had already taken profits on this extension. So whenever we were in this area, I was actually looking for a re-entry at 92. So unfortunately, I missed this move because I was looking for a deeper pullback. But thankfully, the next day I made up for it because we found a similar pattern. But regardless, you could have re-entered here where we formed a bit of a double bottom right on the 50% retracement. So I'm already getting lost on how many confluences we have, but this chart is just screaming buy, buy, buy. We have all these bullish confluences. I think this is like number 7. Let me see. We have the uptrend, that's 1. We have the breakout of the downtrend, that's 2. We have the bounce off of the support level, that's 3. We have the breakout of the pre-market downtrend, that's 4. We have the 50% pullback, that's 5. We have a double bottom here. Whoa. We have a double bottom here, that's 6. And then I don't even think I mentioned the retest of this downtrend. So that's number 7. So that's 7 confluences that we have, and the day is just getting started. So let's say your entry is down here at 97. But for the sake of making math easy, let's just use 5,200. So your entry is right here at 5,200. Well, the reason I like using context is because it can help you formulate where you want your targets to be. So you can see we're in this massive uptrend. The market is getting shaky because, it looks like we're breaking down. Maybe we start rolling over. But then we break out of this downtrend. It just feels like the market wants to break out. So even though it was 9 o'clock, I just had that feeling that today was probably going to be a trend day. So on trend days, my rule of thumb is that we hold the 9. And if the 9 breaks, the 30 holds. And if the 30 holds, I go to a 15-minute chart and I see if we're on the 9 moving average on the 15-minute chart. And then once that breaks, it's like, okay, it's time to get out. So you could have had 1 or 2 targets on this trade. The first one being the bull flag. So we have our pull. So this was a 20-point move. If you had caught it out, you could have got out there. You could have gotten out here, a pre-market high, which would have been a good area because you can see that there was still a seller there. Or you could have just ridden the trend line for a bigger move. So you can see that we're holding the 9 this whole way. We ended up breaking that for a bit. We're holding the 30. But if I go to a 15-minute chart, on a 15-minute chart, although we break the 9 moving average, we never get a close or even a retest of the 30 moving average. So if your goal was to hold until we broke the 30 moving average, you could have caught this entire move, which was at 52.44, which was a 44-point move. And we'll call it 45 because I gave you some leeway at your entry at 200, which was over a $2,000 move if you held this entire move. Now, I only caught a portion of this, but I had that feeling that it could have been a trend day. So it's also something that I need to work on is holding for these longer term moves. So I know that was a lot to break down. It's a lot of information, but it's a lot of useful information. So I hope that you watch this video over and over again and really study the charts because, like I said, the market has a language and you just have to read to know where to get in. I see all this stuff happening live, and sometimes I may be a little bit greedy and want to get a better entry, but ultimately you just have to take a chance and enter in whenever you think you see a good setup. And if you're wrong, you just have to be wrong and accept that loss. But yeah, this was an awesome play. I know a lot of people that took it. So now you know what to look out for whenever you see a setup like this. So I hope this video was useful. I hope that you can apply it and start making money from it. But that wraps it up for this week. So I'll catch you Monday when I do the daily breakdown of the SPY. I love you.